Options Tender Weekend Edition. Thanks, guys, for being here. If you're new, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. Also, don't forget to like this video. It really helps out for the algorithms to get going, and we want to keep doing this material. So most of all, Patreon, we give so much information, education, attention to detail for our patrons. It's only $5 to join. Check us out. So here we go. We're gonna go in the weekend edition, SPX on multiple time frames. We'll go through this whole list on the left side. This is our layers of technical analysis for anybody that's new here. We layer all sorts of analysis, whether it's traditional or new aged, and so we're going to do that in multiple time frames, and we have to it gives us a big picture view of what's happening down and seeing what's going to possibly happen next week. So here we go on the weekly SPX. That's the cash index for just in case you don't know, the cash index for the market. The market is representing three different indices. We have the SPX, we have the SPY, and we have the ES. The ES is a futures, the SPY is an ETF, and then the SPX is the options cash market. So, okay, let's get into it. We are working up to wave 3, down to wave 4, and now we are working on possibly primary wave 5. And then within this primary wave 5, we should have 5 waves in there as well. So this would be wave 1, 2, 3, and we think we're still working on this wave 4. We didn't quite come back to the 38.2. And why do I think that? If it, you know, it is possible that this 1, 2 here is coinciding with this 3, 4, and we'll just have to move the primary up, and we have one more wave up before a bigger 382 wave down. So it's possible this wave count is wrong by price action happening here. But here's why we're sticking to our guns on this. And even though this market looks bullish, on the chart, there is nothing wrong with this market. We reached all-time highs again. We worked off of this rising pivot. We're still holding all the E8 EMA on the daily or on the weekly, 20, 50, 100, 200. We're way above all of them. Everything's bullish there. Now, the caveat. We are creating bearish divergence, and it's started playing out on the weekly. Right now, we actually made, because we made all-time highs, we made another bearish divergence here on the weekly. So we are, the yellow leader line is back testing the moving average at this point. And also on the RSI, we made it an even lower strength bearish divergence here. So not looking good on the momentum or the strength indicator, even though price looks like it's just massively bullish. So in my mind, that's setting up a bear trap. Now, how high do we go? We don't have that answer. Really, this could be an expanding flat. So what does that mean? Let me dig in here, and then we'll go down to the daily. So this possibly would be an A down. An expanding flat means you make new all-time highs for a B, and then a 5-wave move down for the C, and we don't know how far that would exactly go. We could measure out some things. We'll get that on a later date for more detail. So we do believe this wave 4 could still be playing out as some sort of flat. This just real shallow correction here. You know, either we have the wrong wave count in that this wave 4 would coincide with this 1, 2, which would mean it's just it's a minor. It would be more of a minor wave, and then the intermediate wave would be wrong for us, that we would actually still be in wave 3 for the intermediate. So, okay, not to harp on that too much, I just want to let you know that we might be getting faked out for the bulls here. That does not mean you don't still play bullish to the upside when momentum is heading up. It just means that watch out for the reversal. So going on to the daily chart, This will give us a little bit more detailed clues of what's happening. So we have the ending diagonal. We broke down from it A, B, C. We didn't even reach the bottom of that measured move diagonal. That doesn't have to happen, but it's a measured move that could happen. We have, if you are a bull, we have at the bottom of this ABC, if this correction is over, then this should be a 1-2. And then wave 3 should end about the 45.74, which we're just hop, skip, and a jump away from there. So we would expect a approximately a 1618 extension from that move. So we might have just a little bit more to go, but we do have an actual reversal, possible reversal. It's technically a pause candle, and we are way overbought on the lower time frames. So we do expect some sort of reversal. And the reason why I call this reversal, but how far? So we do expect a reversal pretty soon here, but how far is that reversal going to go? Is this just a 1, 2, 3, and then a slight 4 wave pullback before moving to wave 5? Possibly. Or is this our scenario playing out where this is a larger A and then a B? I don't know if we can see it up there. Did I put the B up there? Yep. B expanding flat down to C. And this doesn't have to come all the way down this far here. I mean, we can come to the 23.6 as well. But just to give you a clue, A, B, C. Correction would be our expanding flat, which is the most common flat of them all. And we were expecting a alternate count from this point. If this is our 1-2, this would be a zigzag, 5 wave, 3 wave, 5 wave. And that means the rule of alternation, if this is coinciding with the end of wave 3, would mean that this is this ABC. If that zigzag, then we might have a double zigzag, which I think we're above that because we now made all-time highs. So now we're looking at a flat or expanded flat because we broke through all-time highs on this one. Now the QQ is a little bit different. We'll be looking at with the Patreons a little different because we haven't reached all-time highs yet. All right, now I know there's a lot of information. Going back to the weekly just for a second, I missed the candle formation. We have 3 green candles pushing up. Another bullish candle formation, 3 white soldiers. So that's another thing for the bulls. But like I said, if everything is pointing for the bulls to keep charging, but the tea leaves that give us hints that perhaps this is a bull trap. Okay, so getting to the wave count I'm getting at, there's 3 wave move up that might be over, and then a 5 wave move down. It would be very impulsive. So we would probably stop at that wave 4382 retracement that we are looking at. Anything below that, it starts to get a little bit more iffy. So if I put my retracement from the bottom of this wave, and there's other wave counts too, you guys, it gets real complicated when you have these wave 4s. So just to keep it simple, we should come back here to the 382, which would be the 4450 area. If we come back and start grinding underneath there, then there may be something else happening, and we would be looking for a 5 wave move down. But right now we're in a bullish stance, so we do have our puts on for protection, but we are playing Roku. We were in beyond. We got crushed in that one overnight, but so we have some bull plays that are happening, and we will brace ourselves for another move to the upside if that does occur. Okay, so on the indicators, the MACD, what says to us that we might be in a bull trap? Well, guess what? We made another divergence. Now this is a bear divergence that is not confirmed yet because we're still over the actual blue MACD line. When this starts to actually curl over and cross, then we have our bear divergence confirmed. RSI also making a divergence, already starting to curl just a little bit for the strength there, but we'll have to see if we come back down here, test the 50 and possibly beyond. All right, so let's check out the 65-minute chart and just see what do we have going on here in the very short term. So it's possible that we set ourselves up after making new all-time highs for wave B. This is a possible 1-2 setup, and then we'll have to see if we get any follow through to wave 3. So you should see a 5-wave move down for an impulsive wave 1 if we are bearish, and then a move up for 2, and then a larger impulsive wave 3, 4, 5 down. So this is a possible 1-2 setup. And if you decide to take this trade, which we have, then you want to place your stop either underneath this candle at 45.53. We start breaking above that, then we have to have doubts, but it's actually invalidated at 45.60 area. So that's if you want to be much more loose on your stop, then that would be the place to put it at 45.60 area when we know that we're actually wrong. So the most important part about trading is knowing when you're wrong, get out of it, lick your wounds, and move on. You're gonna be wrong when trading. I'm trying to teach my patrons that that's the most important part. We don't care about being wrong. That it means nothing. It's if you take out the emotion, which is super difficult, then you don't care what happens. You just move on and wait for the next setup. So this is a setup. This is a 1-2 setup, and also on the daily candle you have that that doji candle. So again, it only invalidated over the 45.60 area, and then we'll see how far, if this is true, we'll see how far we pull back. It looks like the 382 is about the 44.71 area from this wave 3 bottom here, and start breaking down from that, then we're looking at going lower, in my mind much lower, at least to break these new lows here, to be conservative at a 42.80 area. All right, so what else do we have here? We went through all that. We're going to go to the VIX futures. All right, VIX futures. Now, the big word of the day, of the year, it is contango. So what is contango? Contango is when our VIX futures, let's pull up the, let's see here. We have our VIX futures right there, VX, and then our VIX VIX is right here. So this is the actual volatility index, VIX, and this is the VX, which is the futures for, which should be tracking each other. Now, the futures just had its expiration, and it expired and broke to the, opened up at the 19 area, while VIX is still in the 15 area. What has to happen? Two things. This is binary. They're not going to meet in the middle. This is not going to be it's going to snap. And either it's going to snap to where the VIX goes to 19 and above, or the futures are going to snap to the downside, fill this gap here, and start moving lower to get back in line with the VIX. So that's the most important part that we're talking about, is the VIX and the VIX futures have this contango, which means that the near-term futures are less than the actual futures, outdated. Oh, I think I just said that all wrong. So the contango is the near date futures. Contracts are lower than the outer date contracts. And so if you're looking at 4 days here, 16, and then out here the 25, which is trading, is the 19. So that's the contango. Those have to converge, and it shows that with the VIX. So I hope I didn't confuse you there. Whole point is they have to snap back together and start tracking each other. Okay. Enough. So we do have this, it looks like a little bit of perkiness here. We're moving off of this MA possibly to the upside. We have bullish divergence there on the MACD. All right, what else can we show you? We want to stop here. We're not going to do the SPY volume. I will tell you that the volume has no confirmation on it. Now, the reason why is because that's an official trade for us and the patrons. So I don't want to show all the targets and everything. It's $5 to join, and it's so it's well worth it. Our expected move is 54 points to the upside or downside this week, and we'll definitely check that out each and every day here at Options Tender. So please join us on our YouTubes, and it's all free. Hit that notification button if you want to receive this information often. And that's it, guys, for the free video. So thanks for joining me here at Options Tender. Patrons, stick around.